Hello and welcome to CATEX-TV. I'm Tom Bailey in London. It's 4:30 PM in London, 11:30 Eastern Time and 12:30 in Bermuda. Today in history. Well, today in history has been a sort of day of small-scale disasters. In 1693, Mount Etna in Sicily erupted. In 1839, an earthquake in Martinique destroyed half of Port Royal and 700 people died. Today in 1966, 550 people died in landslides in the mountains behind Rio de Janeiro following heavy rain. And in 1995, a DC-9 crashed near Maria la Bella in Colombia. 51 people died and a 9-year-old girl survived. And in case all of us in the Northern Hemisphere are feeling that the weather we're suffering at the moment is deeply unusual, it's worth noting that today in 1949, the first ever recorded snowfall in Los Angeles took place. So it's not without precedent, this unusual weather at this time of the year. So now to the news. Motor insurers in the UK are facing huge losses in their 2009 results. Combined loss ratios for the private and commercial insurance motor market in 2009 are set to exceed 115%, according to EMB, the International Actuarial and Business Consultancy. In the private motor, combined operating ratios could exceed 120%, it said, whilst commercial ratios are likely to exceed 110%. A sharp increase in bodily injury claims has more than offset the premium increases that insurers have been able to achieve in recent months. This, combined with the reduced reserves available for release, will significantly deteriorate reported results for many companies for the year. And we're already seeing a number of insurers pull out of the motor sector, including most recently QBE. Now, reinsurance pricing is softening as capacity is reaching an all-time peak, we're being told. P&C National Underwriters magazine has reported that reinsurance pricing was down for the latest January the 1st renewal season, as global capacity has been restored to levels close to the all-time peak of December 2007. While pricing has softened, underwriting has remained apparently disciplined and orderly. Part of the discipline seems to be due to the belief that solid underwriting results in 2009 were mostly attributable to an unusually low incidence of natural and man-made disasters, including a relatively quiet Atlantic hurricane season. In addition, while recovery in insurer investments has increased capital adequacy levels, it's possible that underwriters are still acting in a more risk-averse manner, given lingering doubts about the robustness of the financial system. Now we're seeing a bit of tropical storm activity, in fact quite serious tropical storm activity. In the mid-southern Pacific Ocean, we are seeing Cyclone Edzani. It's sort of heading on a southerly path at the moment, and I think it's expected to continue on the southerly path, but we'll keep you updated of any progress. It's currently a Category 1 cyclone, so very severe winds there, and it's winds in excess of 90 knots. Anyway, as I say, we'll keep you updated of any progress or changes to that. 2009 saw an increase in the number of startups in the Bermuda reinsurance market, and this has been reported today in the Insurance Day. The number of insurance and reinsurance companies start up in Bermuda increased for the first 9 months of 2009 compared with the previous year, although the tide was reversed for the third quarter. According to figures released by the island's financial regulator, the Bermuda Monetary Authority, 28 firms were incorporated between January the 1st, 2009 and September the 30th, 3 more than during the same period of 2008. Straightforward Class 3 captives accounted for the lion's shares of incorporations for both periods, with 9 in 2009 and 16 in 2008. The first quarter of 2009 saw the introduction of 2 special purpose insurers, or SPIs, which the BMA defines as a special purpose single transaction or single customer insurance company which assumes insurance or reinsurance risks and which typically fully funds its exposure to such risks through the proceeds of debt issuance or some other financial mechanism, whether repayment rights of the providers of such debt or other financing mechanism are not subordinated to the reinsurance or insurance obligations of that vehicle. In other words, they're fully collateralized vehicles. Now, RSA, the UK insurance giant, has brought a majority share in the Swedish non-life carrier Svealand for 138 million kroners, Swedish kroners, which is about $19.5 million. The UK insurance giant RSA is currently the speculation of a lot of takeover talk on the UK, on the London Stock Exchange, and there's said to be a number of large insurance buyers that are eyeing it as a potential acquisition. The firm which they bought, Svealand, operates across southern Sweden and provides a range of products including personal motor, household and commercial property. That's only acquired it's a majority stake, but it's only an 88% stake. The remaining of the company is held by consortiums of 13 saving banks who are also based in southern Sweden. We've got some news about the Qatar regulator. A company called SEIB Insurance and Reinsurance Company, which is a new Qatari company headquartered in Doha, announced today that it has been granted a license on the 21st of October 2009 by the Qatar Financial Centre Regulatory Authority, the QFCRA. SEIB will soon begin operations in Qatar, offering insurance and reinsurance services to both corporate and retail clients. SEIB is a result of a joint venture between H.E. Sheikh Jabor bin Yusuf bin Yasmin Al Thani and Chedid Capital Holdings. Chedid Capital Holdings is a regional investment company specializing in the insurance and reinsurance industry. It is a group that was first established in 1998 and has grown since at a compound annual growth rate of 53% over an 11 years period. Chedid Capital Holdings generates business out of 22 countries in the Middle East, North Africa and beyond. It is partly owned by Euromena, which is a private equity fund managed by Capital Trust of the UK and sponsored by the Europe Investment Bank. The joint venture is managed by a strong team of professionals who are leading a dynamic, proactive underwriting, risk management and marketing approach. So that's good news. And UIB, the United Insurance Brokers based in London, is expanding in North Africa with its win of the Royal Air Maroc airline. UIB is appointed as sole and exclusive insurance broker for the renewal of the comprehensive package of insurances to Moroccan flag carrier Royal Air Maroc. The win, which follows a rigorous tender process, increases UIB's presence in North Africa and further signals its intent to expand in the wider African region, both in aviation and other commercial lines of business. UIB claims that the Royal Air Maroc appointment, together with its existing regional client base, which includes Air Algeria, means UIB now has a significant share of the North African airline market. Royal Air Maroc is a fleet of 71 aircraft with a value of $1.5 billion and its routes over the US, Europe and Middle East. GLT were previously appointed broker, and UIB secured the business of the tender process ahead of both Marsh and Willis. So congratulations to UIB. ACE has brought in a cyber liability underwriter, Ian Ainsley. ACE European Group has strengthened its offering in the technology and cyber liability insurance sector, appointing Ian Ainsley as underwriter. Based in London, Ainsley will be responsible for the underwriting, technology and cyber liability in the UK, Ireland and North America. He will work with national and overseas brokers to bring awareness of technology and cyber risk to their clients and help ensure those clients have adequate protection in the event of a breach or failure of their IT systems. Well, that's all from us today. Thank you very much for joining us, and we'll be back with you at the same time again tomorrow. Until then, thank you very much and goodbye.